Hello, I am JB Bryan of JB Bryan Financial Group, the home of AfroEconomics. And today we're going to talk about building wealth when your cash flow is low. We're going to give you absolutely no excuse for not building wealth. And I thought that this topic was right on line because I I think that we kind of don't appreciate everything that we have. We focus too much on what we don't have, and we make excuses for not saving for our future because we say, well, if I had more money, well, what if we don't create as many bills so that we do have more money available? So I want to go over some major topics or some topics that I think are important on things that you can do to increase your cash flow so that you can focus more on wealth development. And wealth to me encompasses a lot more than money. Wealth includes, in a big way, your health. I think that we take our health for granted, and we don't realize that the major reason that people lose their homes is because of a disability. If you look at it statistically, most people have lost their home because of a disability, not because of, and it does happen. People do lose their homes because they lose their job. But if you have your health, you're going to be able to get another job. So a big part of wealth is protecting your health, protecting your mindset, enhancing your mindset, and making a decision about it. This morning, I was on CBS 6, the Virginia This Morning show, and we were talking about living off minimum wage. And it leads us right to this discussion, and we have a lot more time. I only had 5 minutes this morning to talk with them about how to actually maximize what you're making, regardless of if you're on minimum wage. As I discovered when I left corporate America and started my company 20 years ago, I was amazed at how little you actually can live off of, and your lifestyle really doesn't have to adjust a lot. We just need to reduce those extra expenses. So let's look at some major ways of how you can still have wealth development. And before, let me complete my statement about wealth, including your health, wealth including having more assets than you have liabilities. Your wealth is your assets minus your liabilities. That's leaving over your wealth or your net worth. That is what is actually available to you as assets. So when we have assets in its truest form, everything that we have theoretically that's really increasing your wealth are things that actually generate income for you. So in my business and financial services, a lot of times when we look at your wealth or your net worth, we're looking at things outside of your residential property. But in AfroEconomics, we really need to focus on the fact that your residential property is not something that's generating income for you. It is where you live. So we want to realize that in many cases, if you don't purchase the right place or incur the right expenses for your living expenses, they can pull away from your ability to focus on acquiring assets that can create income for you, because you may be spending way too much money for your living. You could be living way beyond your means. And sometimes people refer to that as house poor, because you're one person that is dominating the most of your income is going into just living, and most of that space you're not maximizing, and it's not generating any income for you. If you have a 6,500 square foot home and you're in it by yourself, if you had renters in it, it could actually increase your income. So we're talking about wealth, increasing your wealth when your cash flow is low. So location. Now, I have a lot of friends out there that are in real estate. We have one person that is actually participating today, and he is Marcus Rice, that owns his own business. And the brother is unique in his area that is actually giving people rebates for when they purchase their homes. But when I say location as a financial advisor, I'm saying when you're saving money, you need to make sure that you're living in a particular place that is cost effective for you. If you're living in a place that allows you to eliminate having a vehicle, because a big money drain for many people on limited income is their vehicle. Especially in AfroEconomics, we've seen in our community a big problem with people purchasing cars that are not tax deductible expenses. They're working, they have to pay taxes on that money, and then after taxes, they still have a $1,000 car payment. So you have to make a lot of money in order to take care of that $1,000 expense on that vehicle. Then you have property taxes in many states, and then you have or the insurance expense. Then if you have children, you have to make sure that the children are insured to cover that, to ride in that vehicle also. So if your housing is in a location that allows you to have public transportation, or your housing is in a location that allows you to actually ride your bike to work or walk to work, the money and the health that you can help by actually getting rid of that money drain called a vehicle for people on limited income. Another one is to make sure that you find free stuff. Now, the wealthy people that I spend most of my time with do not hesitate to take care of free stuff. I don't understand why many people on limited income do not allow themselves to take advantage of the free things that are available to you. I have met millionaires that go to free dinners at their church because it's free and they want to save their money. Now, why would a person who has limited income not do that? Because in many cases, our pride keeps us in the same situation that we're in. Our pride stops us from focusing on the things that really matter, but not those of you in AfroEconomics. We really focus on how we're going to build wealth with limited income. And this is how we're going to do it. We're going to focus on living in an area that's going to help us reduce our expenses. We're going to focus on lowering our expenses, like on vehicles, especially a big money drain. And we're going to take advantage of free stuff like this discussion. This is free financial advice from someone who's been in the business over 20 years as a registered investment advisor. This is amazing. The number of people who don't just take advantage of these type of discussions, which allow you to ask me anything in the world. But the majority of people who are participating in this hangout are people who are already doing the right thing. So we've got to make sure that we get our friends to listen to this recording. We have people on minimum wage who are sitting there watching crazy shows right now on cable, which is another additional unnecessary expense. So if you have a friend that is wasting their time watching an unnecessary show at noon to 12:30 today, and they should be watching this, taking responsibility for what they do, and they call you and ask to borrow money to pay their bills, make sure you tell them to watch this. It's free and it's empowering, I hope. So we want to make sure that we are being humble. We want to minimize our fixed expenses, which include things like your mortgage, which include things like your rent, which includes things that we want to minimize these things. We want to make sure that we're getting the maximum savings in those areas. We want to make sure that we minimize things like furniture bills. How about a lady told me a story that she was riding down the street just this past weekend. And I love when people approach me and tell me like really ways that they've kept money in their pocket so that they can put money into their savings and they can put it into their investment account because they made the right choices. And so she's riding down the street, she's going to buy some furniture, and she sees these people pulling furniture out of the house. She pulls over and says, "Are you having a yard sale today?" And they said, "No, we're moving. Whatever you like, we're selling it." And she said she got everything she needed. Like she spent like $100 and she was about to go into debt for thousands. So when we're talking about low cash flow, we want to make sure that we really live within our means. It is not, even when you go into a store now to purchase something, and you have the cash, and I've been in this situation, they will almost make you finance it. I've had to leave stores because they're getting on my nerves about getting financing from them when you just want to buy it. When you just want to buy it. Even amazingly so, that your debit cards give you limits on the amount that your debit cards will allow you to spend when it's your own money on a debit card. So they make all of these things are really set up in ways that are going to put you in debt situations. So make sure you keep your checkbook handy so that you can buy whatever you need to buy cash, making sure that you live within your means, because these companies make a lot of money by you financing everything you purchase. So we want to minimize our fixed expenses by buying things, by stopping. Don't allow your month to start with bills that are fixed expenses that exceed whatever you could possibly make that month. You're starting the month with these big expenses. Another big fixed expense that is a money drain is like cable, the cell phones, the cell phone bills. These smartphones, are hurting a lot of people in their ability to pay their bills. And they've become like a really big part of our life. But these cell phones should pay for themselves. It should be a money-making tool for you, not just a social distraction. And we need to really focus on being stingy with our time. Stingy with our time. That is a very important part of wealth development when you're on limited income, is that every minute of your day should be on how I'm going to eliminate this issue in my life. How am I going to increase my income, or at minimum, keep more money in my pocket so that I can save that money? And a good way to make sure that you're saving money is to set up where you're actually moving money from your checking each week, even if it's just $10, that you're taking that $10 and you're putting it over into a savings account each week. That a little bit of your money is going into a savings account, even so that even at the end of the year, if you're saving money each week, you should have 52 weeks in a year. You're going to have $520 in that account. And that is a big accomplishment for many people, especially if you're living beyond your means. So you want to end, if you have $520 in your savings account, but you have a $5,000 credit card. Now, we know that's totally out of balance, because the credit card interest rate far exceeds the interest that you're getting on that savings account. So we've got to make our money and make sure you get rid of those credit cards first. And if you're in a bad financial situation, call the credit card companies and explain to them your situation. Do not block the call. Do not answer the call. Make sure that you're talking to them, because a big money drain is having bad credit. And we're going to definitely do a discussion one week on why having strong credit is important. As many of my friends, and even me as an investment advisor, as an insurance agent, do you know that they charge you more for having bad credit for even your car insurance? So when I'm giving a customer a quote and during their financial plan, we look at everything. So when you're giving them a quote and you're analyzing their insurances, they're paying a lot more for their insurances because of maybe losses and because of the interest. Your credit score. Your credit score is a big part of your insurance rating. And even if we don't have homes, we will, from an AfroEconomic perspective, we're very likely to have a vehicle and have to pay for car insurance. And not to mention how much it's going to impact your career choices, because certain careers are not going to allow you to advance or be in that career with bad credit. So that's going to keep us in a low cash flow area. Now, I'm not even suggesting, because low cash flow is a big problem for people who make a lot of money. They make a lot of money. And because they make a lot of money, they start accumulating a lot of debt. So that's why you see these big TV stars, or you see, your friends who make a lot of money, but they've actually, because of people, just giving them every loan, everything. I remember there was a time where we would get checks in the mail, and if you signed that check, that you got that money, like $5,000 just put in your hand through the mail. But gone are those times. But there's still a lot of credit card offers coming in the mail, and they're encouraging you to buy things on loan instead of just saving and purchasing. I have a question that's come in.
How many should I have at my bank?
How many accounts
should I have at my bank?
How many accounts should you have at your bank? Well, I mean, of course, as an investment advisor, I think that you should have your investment accounts, with your investment advisor, and definitely that's impossible, but you definitely should, call me at 844 JB Bryan, 84. That's our toll-free number, 844 JB Bryan, and we have to actually look at the accounts and what you're using the accounts, but to have 5 or 6 checking accounts or 5 of different of the same type of account, that most likely that would be unnecessary to have all of those accounts. And then, making sure that you're taking advantage of all the different financial services that are available. Like, I don't think that everybody is good at all the same things. Like, your bank teller might not be the best person to actually get your investment advice from. And your investment advisor might not be the best person to get your checking account from, because, you may not have all the ATMs available, like that are available for you and things like that. So you want to, make sure that you have someone, a financial advisor in your Rolodex, and that you are, communicating, and that you feel comfortable enough to ask them absolutely any question, but be as honest about everything that you have going on as possible with them, so they can really give you some good advice. But so thank you for that question. And then we're also going to some other things. So we're talking about building wealth when you have limited cash flow. So we have location, making sure that you live in a cost-effective, less expensive place if you can. Don't waste your money on the big money drains. Look for free stuff. Be humble and ask for help and every time you need it. Don't wait until the last minute. Make sure and taking advantage of programs that are available for you to get financial assistance if it's come to things like that. There's even people who have gone through things and they can't take care of their children. And in reality, that is a big challenge. And make sure that you talk to your family about these things. If you have a family member that's not taking care of their children well, reach out to them. Tell them about services that are available. Don't let the children just go through these things. If they're not home with their children at night and the children need to have some assistance, don't, because that, in AfroEconomics, a big part of the future of AfroEconomics for all of us is the children, the young people, making sure that we're setting the proper example and giving them the safety and the security, not just financially, but, emotionally, that they need. And that we do a lot of things in order to make a living, but make sure that what we're doing to make a living is not, limiting our ability to make sure that they're okay. And you see that in a lot of situations with single parents. There's one lady in Virginia who, did not have anyone to keep her child and left her child in the car, and the child died. We need to make sure that we're there for our family members that are going through things, because a lot of times we sit back and, we're watching things. I mean, AfroEconomics is about being a team and helping each other. And so we want to take advantage. Another way to increase your wealth while you have limited income is to take advantage of side jobs. Take advantage of ways that you can just get extra cash that you could use for your savings account without having to go through the IRS. Because every bit of income that you get on your W-2 form, is going to be taxable income. So any side jobs that you can get for $100 here, $100 there, $50 here, $50 there, you can think of that as just savings that you're going to put into that savings account, and it's going to be for yourself. So that's how we're going to increase our cash flow, through taking advantage of side jobs. And a lot of times the side jobs and multiply and really looking at multiple ways of different ways of income can be more cost effective than getting a second job. Yes.
How do credit unions compare to banks in terms of safety?
How do credit unions compare to banks in terms of safety? Now, credit unions are backed the same way as banks are, and they both have the FDIC insurance. But you want to definitely talk to your credit union about the services that they provide. I've had a lot of clients that, from a banking perspective, have had a lot of success with their credit unions. So make sure you definitely talk to them. But your credit union will have FDIC. Banks will have FDIC. You know, the even my clients who in their brokerage account can have their money just in cash, and it's FDIC insured. That the book, and so it's you can make sure that your cash and FDIC, though, you need to make sure that you know that FDIC does have limits on the amount of insurance that they're providing to you as a customer per account. And it's like about $250,000, but you want to make sure that you're, and there, you might be saying like $250, I'm not going to $50,000. I'm not going to leave that in cash anyway, but that's important to know. And then when you're walking to the investment area, investments do not have FDIC insurance, and investments fall under something different called SIPC. And you want to make sure that on your investment statements that you see SIPC, that's called SIPC, and that's the investment firms have to have the SIPC coverage on that account, and it exceeds the $250,000, of course. But make sure that each institution that you ask questions about, how is it insured, but realizing that in investments, unless you've chosen an insurance, unless you've chosen an account that is insured, you'll see in the fine print that investments can go up and down with it. They are not insured. You're just insuring yourself against that particular firm going under, but you're not insuring yourself against the stock market there. So with each type of investment, each type of account, you're going to have different criteria and different information. And too often we don't look at the fine print. So I want to make sure that AfroEconomics teaches you to get all of the details. Get all of the details. In AfroEconomics, we're about self-reliance. We're not about being victims. We're not victims. We're not asking about handouts. We're not asking about anybody looking out for me except for ourselves. So I appreciate that question, because make sure that you continue to ask wherever you have your money deposited. Find out what get all the details. And if you're working with someone that you don't feel comfortable asking questions from, then you need to make sure that you move your money somewhere else. You deserve to feel comfortable when you're asking questions. And then we talked about taking advantage of the side jobs, setting up automatic savings. What about getting educated and training? And see, we want to make sure that we allow ourselves to live in an area, to be in an area where it's not expensive to do what we need to do. I remember I had to make a lot of changes in my life when I felt that I wasn't being as healthy as I needed to be. Everything was inconvenient. This was over there, that was over there, that was over there. So now I've really simplified my life to make it easy to get everything done, and to take care of myself and take care of my child and to take care of my business and to take care of everything, and without having to drive 100 miles that way and 100 miles that way, because your likelihood of those things being successful reduces. So if you know that you need to get a particular training, or you need to get a particular degree or a particular skill, make sure that that is available to you. And that's why probably in AfroEconomics, the online schools have become so popular, because they're more convenient, but we're paying a premium, for that convenience. So I talked to a real estate professional one time, and I've even seen it in the research. They said one of the key reasons that people are not being approved for loans for purchasing homes is because of school loan debt. So make sure you focus on getting an education, but making it as inexpensive and as cost effective as possible. And I talk about that in my book that's going to be released in January. I have a section about knowledge, and that we need to realize that knowledge is important, but some of the most things that the most important things that will increase your income the most could be things that you're going to get for free. There's a lot of information that is at our fingertips that we're not taking advantage of. Aaron has another question for me. Yes.
Large commercial banks tend not to be community
She
sensitive.
said large commercial banks tend not to be sensitive to the community. We're talking about Black people.
Are we better off using local banks or credit unions?
Are we better off using local banks or credit union? You need to make sure you do your business wherever you feel is community sensitive. Bottom line, and that's a beautiful question. I feel that if everyone that was Black was actually made a commitment to making sure that their needs were met and they were treated with respect, then our economic power would thrive. Because we just give our money away. We just give our resources away. We go to jobs and sit there and complain and complain. I was on a panel last week and these professionals were complaining and complaining about their jobs and how the job wouldn't allow them to advance and the jobs wouldn't. I mean, I don't. And AfroEconomics, as I said, we do not buy into being victims. We have to keep ourselves with the least amount of fixed expenses so that we do not have to be a slave to your job. It is ridiculous for us to be or to spend your money anywhere, to make your deposits anywhere, to do your investments anywhere. When I worked in corporate America as a stockbroker, I would watch our people go and sit down and set up accounts with guys that wouldn't even speak to me on a daily basis, that treated me like I was a Martian because I was the only Black person in there as a broker. And we didn't even know the person that would walk right past my desk and go in there and talk to that person who did not have the slightest interest in him as a human being. Was it because he was Black? I don't know. Was it because I was Black? I don't know. But I just know that you should not be giving away your hard-earned money like that. That is sad. And the likelihood of you not having any money years later is much higher because that person feels no connection to you and you feel no connection to them. So when you're making bad financial decisions, they're not going to say, well, maybe you shouldn't do that. And that has nothing to do with the color. It's just that you have no relationship with that person. So AfroEconomics is about us becoming confident about who you are as a person. It's about you not just doing business with Black people, but whoever you do business with, they give you good business, and that you are smart and savvy and know what questions to ask, and that you realize that Black wealth matters, and it can be increased by the confidence that we continue to develop from enhancing our knowledge through discussions like this. So as we reach 1227, we talked about getting educated and making sure that that education and training that you get is cost effective. Just looking at an article this morning, and it was talking about where the Blacks with college educations are not making the income of people of other colors that have the same education. And they found in the research that it's mostly due to the majors that we're choosing. And it's so true. It's not, we want to think, oh, because they show you the Blacks make this, and Black college graduates make this, and non-Black college graduates make this. But that's not enough. The key point there is, if you're choosing to major in education, and this other person is choosing to major in education or finance and accounting and things like that, then their major just pays more money. That's it. So we need to make sure that when we get that education, that we're choosing degrees that are actually going to create the income that we desire, or we're just going to learn to adjust our living to that particular income that we've chosen, and living within our means. So it's bigger. Things are much bigger than what the numbers. That's why I don't focus a lot on statistics and talk about, well, we only have this, or we only have this. I mean, we got to go way back to explain a lot of the things that AfroEconomics is going to pull us away from. So we can't change the past, but today we can do things differently, and we're going to do it. We're doing it. And in closing, my key point of how we're going to develop wealth on limited cash flow is that we're going to make a decision to never, never, never give up. I'm JB Bryan, and I'm the president and the chief investment officer of JB Bryan Financial Group, and is the home of AfroEconomics, and we are a registered investment advisory firm. Thank you for the opportunity to talk, and please continue to make your comments, and I will be on standby. Have a wonderfully blessed day. I look forward to talking to you next week about love and money. Don't you love that topic? Have a great week.